Hello, Step 1 scholars. We are going to start Step 1 course from the 1st October. But before that, we will try to create a background of personal finance. As I mentioned in a previous video, personal finance is different from the business finance. Personal finance include family and individuals, and they have their personal goals like retirement, marriage, child education, buying home, and so on. Now, many people do not have the systematic process of managing money and planning the future finances. They earn, they spend, and whatever is left, they dump as per the social media friends or different fashions. During this course, I will suggest you to think over to design a systematic financial planning so that most of the things will be planned and there will be some unplanned things. So instead of 100% unplanned and haphazard, at least 70-80% should go as per your plan. The way government of India declared the budget in February, it's a roadmap that how what things you are going to do. And personal finance is almost same as family finance. Okay, because there are certain things which are common, like spending in the family and pooling the common resources and all. But under the personal finance, there are two varieties or two different concepts. One is wealth management, other is income management. Wealth management means you already have a lot of financial asset, real estate, gold, and all the asset, and you are managing that to increase more return. That is wealth management. That is one part which everyone has to learn or do after they get the wealth. If you do not have the wealth as of now, but starting, then it is must to learn income management. What is income? Money coming in, incoming by working. Okay, it is usually working income. Money can be coming in by various sources like your income, that is earning money, can be loan, it can be asset income or gift or subsidy from the government or gift from the parents. But let's discuss here the only earning income. Earning income is in, and you are managing that earning income. That whatever you earn, it is most of the time you want to spend. Now, I say that when you spend current, it is, we can call this as a current spending. Okay. Let's say present spending. Whatever your expenses you are doing at present is present spending. You are investing to spend in future. So basically investing is nothing but the future spending. You have planned to spend that invested amount either for retirement, for children education, for marriage, or whatever the reason, or want to give to grandchildren and so on. But eventually everyone has to spend it. Otherwise, the money has no value if it is not spent. So investing is future spending. Now, some of you might have the loan and EMI. What is that? It is the money which you spent in the past. So, whatever loan you have is actually past spending. And when you are doing repayment at present, what you are actually doing is you are doing the repayment of past spending. So, you understood there are three spendings: present spending, future spending, and past spending. Okay. So, your income can be divided or planned into four categories. For example, present spending, future spending, past spending, and I kept fourth as a discretionary. This three can be planned. You know already, you can estimate this in next 1 year. We call it as a short-term planning, short-term money management, where you decide how much to spend for the present, how much to keep and invest for the future, and how much to make a payment. And whatever the remaining is discretionary or unplanned. Because 100% everything cannot be planned. So at least make a 75% of income uh, in a planned manner. Okay. Many financial plans, if you come across YouTube or Google, what they will say, write your goal and amount. Let's say 10 year you want 2 crores, and then they do retrospective calculation and come with the figure that this is amount you have to invest. That is traditional way of financial planning, because it is, let's say you come with across the number that your goal is to achieve 2 crores in 10 years, and then SIP has to be done 2 lakhs. But if you don't have 2 lakhs, then what? So it is not practically significant. What is practically significant planning is how much you have, and you split that income for the planned headings, for the spending, current spending, future spending, and past spending. This is the better way of financial planning rather than the deciding the amount, how much you want to decide. Here, you are not fixing your investment, how much. We say invest as much as possible. How much you have to invest? What is the rule? We say amap. Okay. In Marathi, amap means there is no limit. So this is as much as possible. How much you have to invest for the future goals? As much as possible. And minimum 25% of post-tax income. So this is a rule number one in the planning. Invest at least or more than 25% of post-tax income in financial assets. This investment will help you in the retirement or your children education and so on. Okay. Rule number two, spend less than 25% of post-tax income. So now this is for you to write down or find out how much is the post-tax income in last year. Now you say last year means financial year 2024-25. So find out how much was your post-tax income. Then find out how much you invested in financial asset. I'm not talking about real estate. I'll talk about GED, gold equity debt product. Okay. I'm including gold here as well because it is as good as financial assets. Real estate is out from here equation. So how much you have invested into gold equity debt, and find out another thing, how much you spent. Okay. And you, whether you come to this rule or no. If not, then you'll have to improve immediately. Now you may ask where to invest, what are the financial asset, how to invest. That things will come during the course. As of now, we are discussing at the broader level of creating family budget and income management. This is the current agenda of creating budget of 1 year and income management into four different heads of spending, investing, if there is a loan or repayment, and rest. Okay. As we discuss further, I'll explain detail about the investment. In this step one program, we won't be discussing loan in detail, okay, or even spending. I will give a small hint whenever topic comes, but our main focus is this. Okay, so get ready and sensitize your family members as well now that they have to reduce the spending to less than 25%. Okay. Please note here, I'm not talking about anything about cash transaction. Everything I can talk is about only accounted information. Cash transaction and cash planning is out of the syllabus, right? Thank you very much.